The speech by the Fed at Jackson Hole was supposed to be the most important event of an otherwise sleepy August day. Wall Street was supposed to quietly end the day and commence drinking going into the weekend. Well, it didn't go as planned. Not only did Powell's speech barely make the top three most important events, Friday ended up as one of the biggest drops of 2019. And so, U.S. stocks ended the trading day much lower after President Trump escalated trade war rhetoric, tweeting that he had hereby ordered U.S. companies to immediately start looking for an alternative to China. The Dow Jones Industrial Average promptly fell 614 points. Trump's tweets were in response to China announcing new tariffs on U.S. imports in retaliation for the Trump administration's plans to institute a new round of tariffs on Chinese imports. In other words, have you ever seen a dog chase its tail? Well, that's what's going on. An important part of the Fed speech is that Powell left the door open for a possible quarter point rate cut at its next meeting in September. I wonder what the odds of that are. And I also see that the Axeman has traded in the axe for something a bit more conventional. But at this time, no one can claim victory just yet. So let's take a look at the charts. We're going to look at two charts today, beginning with the 20-year monthly on the spiders, the SPY. The close on Friday was 284.85. And as you can see here, we had that top at that point there, and we've been on our way down since. Let's look at the MAC. That's what's important here. And as you can see, we've had that 2 times that we bounced off that 10 level. And I told you, I think we're going to have a third time. So it looks like that is in process right now. We're heading on down to that 10 level one more time. And if we do, we might hit that 10. We actually might go a little bit below that, and that's really not of concern. What is important is the point that we are still quite elevated above that zero line. So even if we do go below that 10, I think everything is still hunky-dory. Well, maybe not everything, but I think my thesis of the market heading up higher is still in place. Now let's go to the weekly charts. As opposed to last week, we're going to look at the weekly chart simply because I think this is where most of the indications lie right now. And as we can see here, we're riding just above that 50 EMA on the price chart here. But let's go down and take a look at the MAC again. That's what's most important. As you can see here, the fast line moved through the slow line. It's heading on down, still elevated above that zero line, so there's still some strength. But with the fast line moving on down, and it looks like the slow line is also starting to head on down, we're just going to have to wait and see where that goes. Now, are we going to go all the way down to this level here, as we did in late 2018? Or are we going to bounce somewhere above that zero line, as we did in early 2018? My bet's going to be something bouncing above that zero line, but I think only time will tell. Right now, it looks like there's a bit of acceleration, and you can see that acceleration there going on down. That red line under that zero level is heading down to that -2. And looking at the price rate of change, that's not really heading down too quickly, but we are under that zero line, so there's a little bit of weakness there. Moving into the relative strength index, that is moving below the 50 line, heading on down. Doesn't look like it's turning yet. We're going to have to wait into next week just to see what happens. We'll have a better reading at that point in time. Stochastic as well. Looks like things are heading on down. And we're still above the 50 though, so perhaps we're going to get a bounce, something like that. Not really sure at this point in time. We're going to have to wait and see. We do have 4 red bars there in the volume, which means things have been pretty negative recently. So we'll keep our eyes on that. Now, the one thing about the volume is it's somewhat elevated, but it's not excessive, at least not yet. So we'll have to wait and see. And looking at the Williams is heading on down. I would imagine that this is going to head all the way down, maybe to the negative 100, but certainly perhaps into that oversold territory between negative 80 and negative 100. So we'll just have to wait and see. But for the most part, the MAC is telling us that we're having some more softness in the market, and that's going to extend at least into next week and maybe into the week after that. Once we get into those time periods, we'll have a much better idea what the reading is, and then we'll take a look at that monthly to see what that monthly MAC tells us. That needs to stay elevated in order for the market to head up and continue on its journey. But right now, things look negative, and it looks like Monday might be another bad day. But it's not excessive, at least not at this point. So keep your hopes up. And I hate to say hoping for a good market, but you never know with these kind of situations. Again, black swans are lurking everywhere. I don't think the trade dispute really qualifies as a black swan at this point in time because it's pretty much known out there. But Trump and his tweeting and his reactive personality can always throw a wrench into the markets, as we see. But for the most part, we're still riding above that 50 EMA. We may go below that. We'll have to just wait and see. And so for today, that's ChewDog Charts. Thank you.